Welcome to the Get Smart with Money podcast. I'm your host, Dayna Hernandez, financial planner and author of Get Smart with Money, Break Free from the Struggle, Build Wealth on Your Terms, and Rewrite Your Money Story. Here we talk about money, entrepreneurship, growth, and resilience, because financial freedom is about more than just numbers. Each week, you'll get practical strategies, inspiring stories, and the motivation you need to stress less about money and create more freedom in your life. Let's get smart with money together. Hello, and welcome back to another episode of Get Smart with Money podcast. Today we have Peter Maher. He is the CEO of Ovanti US. Peter is leading a movement in short-term payment space, aiming to unlock easier, affordable payment options for Americans who have been left out by traditional credit and even most buy now, pay later systems. His work reimagines payments for the 150 million adults locked out of credit. So thank you for being here today. I think this is a super interesting and important topic to talk about. So thank you.
Yeah, no, I'm excited. I appreciate you having me. It's and yeah, since we first got connected, we actually rebranded the company to Float, Flote.
Okay.
Yep. So we are now operating in the U.S. as Float.
Okay. And what does float now mean wholly?
Yeah, I mean, float to me, it's a perfect name because it's just got so many different things. It's like, who doesn't need a little bit of float here and again in their life, right?
Yes.
You know, we joke like, don't sweat it, float it, right? And and businesses should be proud to offer their customers a little bit of float in a responsible way. But then additionally, you know, it's playful, it's got financial meaning, it's got consumer need written all over it, and so yeah, we just, after a long exercise, tested it and vetted it a lot and decided to rebrand the business as Float.
Yeah, I think it's a suiting name. Definitely. Yeah.
We could all use a little bit, you know?
Yes. A little bit of float, a little bit of help.
Yep.
So let's see, because I have some questions for you.
Awesome.
But usually, I don't know, sometimes I don't even go by them.
Yeah. You know, if it'd be helpful, I'd be happy to give you a little background on Float and kind of how it came to be.
Yes. Yeah, I was just going to ask you that. Yes.
Yeah, for sure. And we can just kind of riff it. It's like, you know, Float for me, I'm grateful for it, is a bit personal, because I've been within the system and the model that is not built to serve everyday people, especially who are in tight situations, sometimes at their own fault, sometimes not. I think I told you before this that I wrecked my credit when I was 19. That was entirely my fault. But you know, I took out a pre-approved credit card in the mail. Went on spring break to the Bahamas with my friends, and then, you know, wasn't able to cover the cost of paying it down and defaulted on it. What I didn't know was the impact that would have on the next decade of my life, right? And it was I think I was 25 or 26 when I went to get a truck loan, because my first sales job was in construction, and the guy at the Ford dealership wouldn't even look at me, pretty much, because of my credit score at the time, even though I had a really healthy checking and savings account for somebody that age, and had made very responsible decisions for the past, you know, 3 years or so. And it was kind of my first taste of like, credit score is not an indicator of affordability, right? It's more a lagging metric on something went wrong at some point, right? And I needed a little bit of float at that time. You know, and fast forward through a career that turned into payments and B2B finance and consumer finance. One of the things that I just realized consistently is people that need a little bit of financial breathing room, the more you need it, the harder it can be to get. And especially in today's world with gig workers, immigrants, expats, new to credit, people like I was that had just wrecked their credit due to a life event or a poor decision when you're 19, right? Like, there's just a huge chunk of the population. In fact, you can argue the majority of the adult population, that is for the most part locked out from a little bit of float, a little bit of breathing room, a little bit of credit when they need it. So we got the opportunity to start this business, and what we've built is the first entirely credit score agnostic. It doesn't help you with good credit. It doesn't hurt you with bad credit. Basically consumer finance platform that enables somebody to purchase a good and spread out the cash flow impact of that purchase over a few installments. And what they're approved for is actually based on their current financial capacity and their current financial health, not a lagging metric.
So it's kind of like Affirm is?
So before I answer that, let me state very clearly that I love Affirm, but no, it's very different.
Okay.
Yeah, so we get bucketed into a category called buy now, pay later, right? And there's what we call the legacy buy now, pay later providers, which is like Affirm, Klarna, Sezzle, Zip, Afterpay. They're all kind of built on the same models. They've just chosen different lanes within the same consumer pool to swim in, right? So you've got, if you look at Affirm, and the reason why I say I love Affirm is that I actually don't view them really as a buy now, pay later. They do offer that service, but like I bought my last road bike using Affirm, and like if you know, the cost of a road bike or a mountain bike today is the cost of a cheap car. It's
yeah, they can be. Yes.
And so like when I purchased it using them, the reason I went that route instead of like a credit card is because I knew this is exactly how many installments it'll be over the course of like 2 or 3 years. And this is exactly what the fee associated with it is if I take that whole period of time. So I like that there's a start and an end, there's a fixed cost. But they're traditional lending. When you're looking at 10, 20 grand over 1, 2, 3 years, that's not buy now, pay later, that's lending.
Yeah.
Right. And then you've got like Klarna, which a lot of people are aware of, a great traditional buy now, pay later. They do shorter installment amounts like traditional buy now, pay later, which is like paying 4 over 6 weeks or paying longer. And, but they go much higher on the purchase amount, which can be, $1,000, $2,000. They want to get you into a Peloton or a Louis Vuitton or some other type of high dollar ton. Mm-hmm. And like when you combine that amount with a short repayment period, it's not rocket science. You just can't take as much risk per consumer, so they don't go as deep on the credit score that they would approve. Then you've got others which are very similar, almost identical in model to like Klarna and Afterpay, but they approve a lower credit score is kind of their value prop, as you could say it. But the reality is it's the same model. It's just what they're doing is $100 or $200 purchases tops over a short repayment period. So therefore they can take on more risk per consumer. Yeah. But it's all the same decisioning and credit-based underwriting model. And it still locks out the majority of the population for the most part.
Okay. So if someone has a bunch of credit hits, but has a decent credit score with float, you're approved?
We don't use credit scoring at all.
At all?
We don't.
Okay.
Nope. We don't use bureau data. We don't even do a soft check. Like the others don't. They ping off the bureaus and do a soft credit check. Okay. And basically an inquiry that won't hurt your score, but they still are using that as their leading decisioning metric. Mm-hmm. The funny thing is too, with the legacy models, especially in that buy now pay later space, the only thing you need to apply is name, first name, last name, date of birth, address, email, and phone number, right? Like you could probably look that information up on me with some creative GPTing and Google searching in under 30 minutes, right? And so their fraud guardrails around ID verification and things like that are through the roof. What happens a lot, especially if you're a provider that is, catering to, call it low 600 or high 500 credit scores, like maybe deemed as higher risk by the traditional models, is you're also looking at a consumer base that, because of that same model, is more likely to not own a home, or to be on a lease with somebody else that they're renting whose name is under it, or to have switched employers multiple times potentially, or have multiple employers. Or on one bureau their address ends in street, and on the other bureau their address ends in avenue, or just ST. And what happens is when these call it buy now pay later providers ping up that publicly available information off of the databases that they reference, any inconsistency for the most part will actually kick that consumer out and disqualify them. And so you've got, what you're left with is, sure, there's providers out there that can approve a lower FICO score as long as all their data and history is perfectly consistent. Right? But what that does hugely is exclude things like gig workers and creatives, your drivers, your delivery, your marketing, freelance people, journalists. Like, it's an economy that's growing unbelievably year over year. You've got expats that have just moved to the US for job purposes but haven't established credit history here yet, or and you've got immigrants that are here like lawfully and working, but there's no verifiable data, or they haven't established credit, and you've just got all these populations that legacy model is not designed to serve. True. With us, the only thing you need from us is a bank account. Right, as long as you can link your bank account. So we rely on cash flow driven intelligence and decisioning. So you link your bank account, you log into it just like you would your normal one, but through a secure party, like a Plaid or a MasterCard Finicity. And as soon as you link your accounts and opt in, what we look at is your money in, money out frequency. Is it gig worker type income and cash flow, or is it employer that's predictable and uncertain predetermined dates? What are your obligations compared to what's coming in? Have there been overdrafts? What's the age of your account? And we can pull all that, what's called aggregate data, and put it into our decisioning engine and say, is this person in a healthy enough situation where just being able to spread out this purchase a little bit makes a lot of sense? And for the overwhelming majority of people, the answer is yes. Almost everybody in that population has been told no when they knew they could afford yes.
Yeah. That's awesome. I've always thought about why isn't it more like that? Because a lot of people don't even have any way to build credit, or they just really like to use cash. And so therefore, obviously their credit's not building on anything, but they've been very reliable with it. They make all their payments on everything else, but there's just no way to show. So I really like this whole model, because I've always wondered about that. Well, what about those people? Are they just screwed? They kind of are.
They kind of are to a certain extent, right? And it's and something needs to change with it. It's for me, it's the analogy that we use internally here at Float is imagine if you trained your butt off and did all the right things, the right workouts, the right diet, everything to go run a marathon or an Ironman, right? And then you showed up on race day and they didn't let you race the race because of a photo of your health a year and a half ago. It's right. And it's that's credit versus cash flow decisioning. And it's, for us, we care about your current financial health. And we care about putting you into a situation that's not risky in terms of repayment. Right? But everybody needs a little bit of cash flow soothing, know?
That's great. Also, because me being in debt, I had put myself in debt in my 20s on accident. Did not mean to, but I went to a bunch of awesome concerts and had some awesome birthdays. Went out with my friends bar hopping, and it was a great time. But I accidentally maxed out my credit card at one point. I've had 2 consolidation loans. I've been working probably 2 jobs longer than I can remember during my whole working career now, and just trying to climb out of that hole. That's what I'm still doing to this day. It's gotten a lot better, I will say, for sure. Better have by now. I'm 35 years old now, so, but and that alone, it creates a level of shame where you feel that upon yourself because you did it to yourself. And it's like, also you should give yourself some grace, but it's hard to give yourself grace when you just can't do anything fun anymore. You really feel the weight of your debt. And yeah, so this platform that you have is just, it helps people not feel that shame so much, which is not healthy to feel. It's definitely not. I've limited myself so much, and I moved to the Reno area like 9 years ago, and I think I probably haven't enjoyed it as much as I would have liked to, because I couldn't keep going out and spending money, and I wouldn't even allow myself to, even if I could. So I blamed myself so much.
Yeah, shame's the right word, and it's so unnecessary but like we all feel it. One of the most eye-opening things to me has been like, whether Float ends up being the next billion-dollar payments company, like who knows, but like, and being out there telling the story and talking to merchants, by the way, I do think we'll do well, but like
yeah, I think so.
but like more people than not can relate to the situations that to each of us when we're going through it feels so isolating, right? Like I remember the thought of like pulling out like my debit card when all my friends are going out, when we're starting to, we're not successful, but we're also making some money for the first time in our lives in our 20s, and like, and I'm secretly just climbing out of this hole. I have a $500 secured credit card that I'm trying to pay off every month, but scared to use it even though it's secured, because I'm just like, God, if I miss one payment,
yes, exactly.
It's secured, but it still gets reported as if it's not. And like, I just remember when it felt like everybody else was pulling out a credit card to pay for their dinner, like I'm pulling out the debit card, and it's like, they probably didn't even notice. But I did.
Yeah, exactly. Everyone has their own ways they want to pay for stuff, so they probably didn't notice that. But I mean, if you use your credit, it's going to give you a credit bump, obviously, but you have to have the money to back that up and just pay it right off.
Yeah, or like,
I mean that's what you should do.
Yeah, 100%. It's what you should do, but also sometimes, like, I live in Colorado, right? And I moved out here because if you give me the time, I'm either fishing, snowboarding, or out hunting with my dogs or something. And it's like the lifestyle that it affords me, right? And that it offers me. And like, but like, so this is the immediate example that comes to my mind in this conversation, but it's like, for the majority of your 20s or 30s, and like, unless you're fortunate, which like, good on you if you are, like, but like, more often than not, all of our rent goes towards one of the two paychecks, if not the whole one of the two paychecks or more every single month, right? And then you're left trying to live off of this one half of your income, and it's like, in theory, it makes more sense to do half your rent on the first, half your rent on the 15th from like a cash flow perspective.
Yeah.
But you can't do that, so you're stuck in this situation of like, forfeit this entire paycheck to rent so that it's there by the first, and then get by to my next one, and then you're in your 20s, the next one comes, and you live like a king or queen for 2 weeks, and then and you're back in the same situation. And it's like, but I remember, like, as I was getting things under control, I remember one year, it's like the Epic Pass is what you buy, and now they have all these other ones, but it's like your season pass to be able to go skiing. And like, I remember the deadline like approaching, like, after this date you can no longer, prices go up, or you can no longer purchase the Epic Pass. And I'm just sitting here thinking, like, oh my God, it's the deadline for the Epic Pass. Like, I can buy it right now, but I'm also going to have to go to my landlord and let him know that, like, I can pay almost all of my rent on time, and can you give me 2 weeks to get you the other 500 because I spent it on a season pass.
Right.
Yeah. It just sucks. It's like, there's so many financial, like, there's so many unnecessary bottlenecks with cash flow. And it's just based around 90% of it is just based around timing of expense versus cash flow. And so it's like, I really do think the future is decisioning people on what they can afford in any given moment, and making the money and the payments and things like that move with them, not against them, right? And so it's it's comforting when you think about the fact that wisdom comes when you're older and you've made a lot of mistakes or just had a lot of learnings. But it's like the majority of us have been there.
Yeah, you know? I think so. But it's always on the other side of all of that. You're like, oh yeah, that's what I should have done. It's like, but also now you're equipped to help other people, which is awesome.
100%.
You know, it's I don't know if I would do it again, but at the same time, I might. I might.
I've been asked that question so many times. It's like, well, with that story, would you do it again? And I'm like, my first instinct is hell yeah, because it's shaped a perspective.
Definitely.
And it's right, and it's like, you know, it's like the gym, right? Like muscles don't grow when you're relaxing; they grow when you're stressing them. And same thing with like everything else. And it's like that stress built the muscles that were required for me to be able to take advantage of this opportunity when it presented itself, right? And so it's kind of like, yeah, but there are things I would have done differently along the way.
Yeah, definitely. Just been able to save more money, and even if I was able to see how it would have affected me like 10 years later, I would have been much more proactive about it, because I am generally a proactive person when it comes to pretty much everything.
Yeah.
But I did not see it back then. Did not see it. And I don't know, how were your parents about money growing up? What did they do?
They were really hardworking. Before I was born, my dad was a bartender in New York. And then as kids were coming along the way, there ended up being 3 of us. At some point he got, you know, a normal job and was selling payroll to small businesses. And he did really well at it. And it was just pre-Zoom, where if you got promoted, you moved. Right? And it's virtual was not a thing. And so, you know, he worked his way up, and I'm really proud of the fact that, like, by about the time I got into middle school, he was doing really, really well for a large payroll provider called ADP. And
wow, yeah.
Yeah.
Everybody
He started out banging doors and slinging small business payroll, and then, you know, by the time he left, he was the head of small business. And so it was a really cool success story to get to witness in terms of like him along the way. Now that being said, we didn't get a lot of education around like I knew nothing about managing interest rates. I knew nothing about how to write a check. You know, I knew
on purpose. They don't teach us that, so.
None of it. I saw a meme a few years ago that said, instead of learning credit and banking, I learned hot cross buns on the recorder. And it was like, you know, it was funny, but it's also true, because I learned hot cross buns on the recorder. And you know, so we didn't get a lot of education in terms of that, and it wasn't available in the schools. You know, and I don't blame them for me taking out a credit card to go on spring break, but it would have been nice to understand how to manage those sort of costs and the risks associated going into it.
Yeah, for sure. I would have appreciated that.
Yeah.
They did teach us how to write a check, but that was like it.
It's actually funny that you say that, because I have this random memory, and I'm not sure if it's true or not. but it's like we had a class called Current Events, where basically your homework was to cut out an article in a newspaper or magazine and bring it in and research it and present it to the class, and it was kind of cool. It was kind of a cool class, and it was but randomly in that class is how I remember it, that we had like a one-day thing where we learned to write a check.
Wow.
I think that's like the only, when it came to like money management and finances and things, I think that's kind of the only experience I can even vaguely remember from school.
Yeah, isn't that crazy?
Yeah.
I always think that's so crazy. I think when I was about 10 years old or something, I think the Roth IRAs were coming out, and my mom took me to go open one for me and then one for her too. So that was a memory that I think has kind of fueled my whole financial journey from that long ago. Just one little thing by chance I think. And that's why I'm a financial planner now, and I'm studying right now to be a financial advisor. And it's just funny how everything kind of came around. Like, I put myself in debt, and then one day, trying to lower my debt with my car insurance by switching to another one, I found this company that I'm in now doing financial services, and I was like, oh my God, this is actually so perfect. So maybe I would do it again.
It's wild when you look back on how things that felt so painful at any given time ended up creating the most opportunity or the most learnings that were to be able to be applied down the road.
Yeah,
right.
I always would say, like, I want to help people, I just don't exactly know how. I just know that I don't want to work in a stupid retail store, because that means nothing, you know. I always, and I didn't want to be a nurse. I knew that. No medical, no, I'm good. But I just knew that I wanted to help people, and I finally found this company when I was like, okay, like, I was 29 at the time. I was like, all right, a lot of people that I know are started their careers already. Like, what am I doing? And I was like, I gotta find something, and it just kind of seems like it kind of manifested for me, and I called it to me, and just one day I randomly found it, and it was awesome. I was like, this is it. As soon as I saw it, yeah.
I think I used to have a huge chip on my shoulder. I don't even think they knew it, but like anytime anything went right in my life, whether it was like sports related or getting a job or a promotion, like my brother and sister and like family in general would always be like, refer to it as luck. Like, oh, you're always at the right place, right time, or luck. And that used to really piss me off. Because I'm like, no, like what you didn't hear about is everything I went through leading up to that moment. Right. And because I just keep that sort of stuff in general. And like, but it also kind of dawned on me that luck isn't luck in the way that most people view it. Like, to me, like, luck is keeping your awareness like tuned in to opportunities that may present themselves as they present themselves, and then doing your best to ensure that you're in a position that when life does present you with an opportunity, you're able to go after it. Right.
Yes.
And so it's like that's and you always hear like manifesting and luck, and it's like, I think we all can have luck, and we don't all have the same starting line, we don't all have the same hurdles, some of it, you know, but it's like, but people and opportunities and things will be in front of you. It's just whether or not you've conditioned yourself to be able to, one, identify them, and two, go after them, you know? Yeah,
exactly. There's a picture I've seen many times of like a phone call coming in and says, your opportunity or whatever, like, are you going to deny the call or are you going to take the call?
Yep. Yep, I had one of the biggest moments that changed my whole career, and I don't even know if he really knows it, but like he does. But shout out to a guy named Andy Stearns. He's the head of sales these days for Homes.com. But he started the commercial card and B2B payments division at Capital One, and that was an industry that I'd been in for a few years at the time. And I'd heard that Capital One was starting this commercial card division, and I was under a pretty strict 1-year non-compete from a previous employer that I couldn't sell to mid-market or up companies' commercial card services. So I was doing some contract work with a regional bank. But I heard he was going to be in town because Capital One was doing a road show on banking services that they're basically releasing to the market. Like, and so the commercial card, him and the head of sales at the time, they were going to be in Denver talking about the business unit that they're starting within commercial card. And I almost didn't go because I was 6 months away from my non-compete being up. And but I printed out my resume. I looked up him and this guy named Greg on LinkedIn, so I'd know who I'm looking for when I get to this event. And I see the other guy has like 10 people around him, right? It's the head of sales. People want sales jobs. They're going to him. And like, then I see a guy sitting over at a high top, and it's Andy Stearns, right? And he's been on this road show. He's just checking his phone or catching up on email, whatever, for a minute. And I just went up to him. I was just gave him my resume. I said, my name's Peter Maher. I heard that you're starting a commercial card here. Even if you wanted to hire me, or even if this was a good fit, I can't do anything for a period of time. And what I thought was going to be a 5-minute, please keep me in interest down the road if anything opens up in Colorado, turned into like an hour and a half and like 4 or 5 beers, talking seriously, like, yeah, but talking about leadership philosophy and the culture that he aims to build there, and like an environment where people can still go to work and have deliverables, but like where they feel accountable to something bigger than just whatever their KPI is, right? And at the end of that conversation, it was just like, I don't care what it takes. Like the day that my non-compete's up, I'm going to work for you. And I hit him up all the time. And I started one day after my non-compete ended. And yeah, and we built that division out, and I learned about leadership and failures and high growth and startup and creating new markets, and then I ended up leaving. And after a few years, and yeah, and Andy at the time, now it's a few hundred people. It was like a dozen when I started. Wow. And Andy gets on a call with me, and he's like, is there anything that I should be thinking about to change your mind? And I was like, no, it's your fault. And he's like, what? And I was like, you showed me what awesome looks like. Like you showed me how fun building something can be, no matter how stressful it gets. And like, that's what I'm now addicted to. And this has become awesome. Congratulations. But it's your awesome. You know, it's like, I want to go out and try and build my awesome. And we've remained awesome. Close ever since. But it's like sorry to go out, aside from that tangent, it's like, had I not shown up to Blue Moon Brewing Company in Denver that night, and just to meet Andy Stearns, right? Like, yeah. Who knows where I'd be today, you know?
Yeah, it's crazy when things happen like that. And it's funny, I think it's funny that you put yourself in debt and huge credit debt, and then you're working for all these creditor people.
I know. It was business credit though. Yeah. It was we were doing business accounts payable automation, using what was new at the time, virtual card technology. And it was but yeah, it is ironic, isn't it? And then I ended up in payments, and you know, through the whole thing, it was like, why aren't we doing more with cash flow? And like you know, when you go to the doctor, they don't like listen to a recording of your heart a year ago, they listen to your heart, you know? So it's like, so like we have the technology, we have the wisdom, the learnings, the failures, right? Like why is it so hard for us to meet people where they're at, right?
Yeah, that's totally true. Totally true. You said you learned a lot about leadership and all those other good things, but what is like probably your favorite tip, or just a really good tip you know of, like how to be a good leader?
Yeah, well, I read in a book a line, I'm gonna mess up the quote, but it was like a couple years ago. I was reading a book called The $1 Trillion Coach, and like and it's like, your title is manager. It's up to the people that report to you whether or not you're a leader, right? Mm-hmm. And so it was something like that. And what I loved about that is like, you know, you don't get to dub yourself a leader. A leader is somebody that people follow, right? That owns their mistakes, knows that we're all going to make them, but operates with like everybody's best interest in mind. And so to me, that was a big thing, as I always started thinking about, do the people around me view me as a leader, right? And right. And so it's like taking on that. It's like if they were to just have to check a simple box, manager or leader, which one would they check? And that influenced so many things around like knowing that like the answer's in the room. It's like, I might think I have a great idea, and if I bring it to a team that views me as a manager, they're just going to take the idea and say like, oh man, like, and then, yeah, sure, we'll do it. And then as soon as that meeting's over, they're probably going to be saying what they should have said in the room if they were comfortable, which is, you know, criticizing it and breaking it apart and pointing out why it'll work, why it won't, better suggestions. And so like leadership to me is like knowing that like, it's like your job is to conduct the orchestra, not play the instruments, right? But you have to have the right people in the seats, and you have to make them feel like they're contributing to the overall sound and the rhythm. And it's like, the answer is always in the room. And if you create an environment where people like leaning into something and criticizing it, what you'll always walk out of the room with is universal alignment and buy-in, right? They don't always, you know, and so to me, it's like creating an environment where people feel like they were a part of what the direction, choosing what direction you're marching in. Right. And then I think the other thing is just like remembering, like, work is really important, but it's not everything. Right. And so to me, what gets your box checked, hopefully as a leader and not a manager, is like letting people know to put themselves first, to put their relationships first, to, like, if something doesn't get done by 5 p.m., it feels like it's like you're stressing and terrible, but it's like, hey, the world will keep spinning, like, get it done by tomorrow. Or you know, it's the environment that you create for people to thrive. And being open about your own vulnerabilities and things, like,
definitely, I think that's huge. People need to be able to relate to you too. You know?
They need to know you're a human. They need to know you're a human being.
Exactly. Yeah.
So,
yeah. And encouraging other people is a big thing that will always set you apart from a manager.
Yeah. And you know what's interesting? One thing at every company I've ever been at, and I appreciate it, but it's also been weird to me, is one piece of feedback, positive feedback, that I've gotten over the years is like some variation of the word authentic. Right? And it's like it's so refreshing how authentic you are, or it's right, or it's and I've just always think to myself, is that really so uncommon that it stands out when you try to be it? And it's like, my advice to anybody, whether they're in a management role or an individual contributor role, trying to figure out what the heck they want to do, is like life is already hard enough, like, to fake it, you know? So like own your mistakes, learn from them, share them. Like, other people have probably made them too, more often than not. And just like try to do well and be the best version of yourself, but like, be authentic. Like, it's already hard enough.
Yeah, life is messy. We all know that. So.
Yep. So it's one of those easy things, I think, that most people early on are taught to kind of shy away from your true nature and show what should be shown. And it's like, no, like authenticity and unique qualities and learning from mistakes and being open about them. Those are the things that people are attracted to, because for some backwards reason, they're very rare.
Yeah. The social media just makes it too easy to look perfect.
Yeah. Seriously. Yeah, and get off social media. That's the thing. That's the last piece of advice, maybe.
Yes. So glad I hired the VA, because I already hated being on social media, and I like, if I ever get on Facebook, I'm scrolling for like 5 minutes and I'm like, all right, I can't do this anymore. I
joke with my wife Brianna, because I say she fuels my funnies, but it's I'm very in a weird way, like, I'm very grateful for groups of friends and a wife and everything that understands my humor. And so, like, I always say, they scroll for me. I feel like once or twice a week, I just get on Instagram. I don't scroll, but I go to my messages, and I've just got a solid 20 minutes of content. And sometimes as maddening as the internet can be, sometimes I love a good funny, right? And so it's like, and so it's a good refresh. But yeah, I try to avoid getting caught up in the death scroll.
Yeah, for sure. It's too easy to get caught up in that, and yeah, plenty of other people do it, so why do we need to do it?
Yeah.
What has surprised you most about how people relate to money? That question.
Ooh, that's a good question.
Yeah.
That's a really good question. I guess it depends on people that depends on the people that you're referring to, right? I can say without a doubt, I know some incredibly happy, incredibly successful people. But all of the most genuinely unhappy people that I know have the most money. And I don't think it has to be that way. But I think at some point along the line, people prioritize it so much that they're willing to sacrifice the things that actually provide real meaning along the way to get there. And that, especially as I've gotten into this role, right? And it's like I have the opportunity to expand my network and learn from people, but also through that process, you meet a lot of people where it's like, man, like the headline of whatever article they're in, or the bank account, or the people that want access to them would tell you that like they have it all figured out. They must be so happy. And I can say the thing that surprised me most is the most unhappy people I've ever met tend to have a lot of money. And don't get me wrong, I know it's very weird. It's very weird. And don't get me wrong, I think you can have a lot of money if you're fortunate and and make the right decisions, and a little bit of wind blows your way now and then. But and you can still be very, very happy, right? But there's certain things within yourself and your identity and your own joy that you should never be willing to sacrifice to get to that, right? And that's always surprised me. And I think maybe because these days I'm not that person, but I get to be around people that have access to a lot of capital or have money and multiple houses and stuff, and I'm always shocked at how with a lot of them, how unfulfilled they really seem. So I think it's a wonderful thing to have. And don't get me wrong, I would love to make a lot of money, but not at the sacrifices of the things that are going to ensure that I'm happy without it.
Yeah, for sure.
So that's always been something that surprised me, and it just proves more and more true.
Yeah, maybe they are really putting too much effort into getting the money and not taking a step back and realizing, well, this is what I can actually do with the money. I can just relax. I don't have to work that hard.
Yeah.
That's the whole thing about having financial freedom, is you get your time back. That's what it should be.
Yep.
Really.
Yep. Your bank account's never going to ask you if you're okay, or check in on how you're doing, right? And so while I want to have a nice, healthy bank account, and I'm going to continue trying to grow it responsibly and set myself up, hopefully, not at the cost of the things that are going to ask me if I'm all right, and so I think that's just time and time again proving to be a reminder. And if you're not careful, and if you are fortunate enough to get into a position where you can really climb the ladder, or whatever that reference is or that opportunity is, and you lose sight of those things along the way, I think it presents a lot of risk.
Yeah, definitely.
So I would at the end of the day, I would choose terrible credit score, paycheck to paycheck Peter with friends and family and a lifestyle that I love and embrace, over some multimillionaire version who sacrificed any of that along the way.
Yes. Yeah, if I ever do make a bunch of money, I never want to lose sight of my life now.
Yep.
Yeah.
I have a very close friend, my other mentor, not Andy, a guy named Marion Thawson, and he's got an incredible story. But I've been fortunate enough to know him since I was 18 years old, and when he was first trying to become an entrepreneur, and he always said money won't change him, and he surrounded himself still to this day, and he's done incredibly well. Still to this day, his friends are the bartender that he likes, or one of his neighbors that he got into a random conversation with out in his driveway one day, and who owns a dog walking business and training business, and and he's just it's always been an amazing, that is luck to have someone like that and to get to see them on their journey. But it's always been a huge reminder to me of There's things that are really nice to have, but never worth sacrificing.
Yeah.
Right? And so he's the example of you can have both potentially, but one is always more valuable, and it's not money.
Yeah, exactly. Your relationships, definitely. So one more question. I know you gotta get off here.
Let's do it.
5 minutes. What advice would you give somebody who feels financially stuck and just doesn't know where to start?
Yeah. I think it's gosh, there's so much. One, just a reminder that like, whether you know it or not, the majority of us have been there. Right? It's so don't be afraid to bring it up, and like ask for help.
Yeah.
And help does not always mean that somebody's going to pay your bill for you or give you a loan. Like that doesn't happen very often.
As awesome as that might be to think about,
but it's not. Yeah, it's but like ask for help and like talk about where you're at, because people by nature want to help, and also to let you know more often than not that you're not alone.
yes.
But then also because your mind is not your friend, right? And if you don't address it publicly and you don't talk about it, it will just eat at you, right? And the other thing is like, just know that no matter like if you want it to be, it is temporary. Temporary could be months or years, but it is temporary, and it's just steps, you know. So that's a big thing, and just to remember that like nobody can say when you're going to come out the other side of it. Nobody can say, you know, there's not a quick fix, easy button. But when you do come out the other side, you'll be so much better because of that journey. So like lean into it. You know, back to what I said a little bit earlier, it's like when I look at the areas of my life, physical, career, growth, like the biggest moments of growth have come from what felt like a lot of the worst situations or toughest situations with no end in sight, right? And then you go to your future self and you look back on it and you're like, wow, like that actually helped. Going through that helped me a lot.
Yeah.
Right.
Definitely. And give yourself credit for going through all that too.
Give yourself credit and celebrate the wins.
Yeah.
Like you pay something off, you just like, you don't have to go buy a Louis Vuitton bag or something, but like
yeah, don't do this again.
Yeah, don't do it again. but like reward yourself a little bit, whatever it is, you know.
Yeah.
Because most of us are going through something similar, right, or have gone through, and just know that like it's all about the little victories along the way, and then suddenly you look back and you're like, holy crap, I just ran that entire race and finished.
Yeah.
You know? Yeah.
Can't wait. Can't wait for my day to finally say it's over. I'm done. I did it.
It's never over, but you'll look back and you'll be like, dang, I've come a long way. This is awesome.
Mm-hmm. Yeah. Well, thank you so much for being on here today, Peter.
Yeah. Thanks for having me. This has been fun. I've enjoyed the conversation.
Me too. I think it definitely is going to help at least one person out there. So
that's the goal. And maybe they'll help one and they'll help one. So
yes.
Please like, review, share, and subscribe to this podcast, and follow us on Instagram at GetSmartWMoneyPodcast, as well as checking out our website at GetSmartWithMoneyPodcast.com.